is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 14th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverant Rhodes, who absolutely knows that each of us should always be pioneers of your future versus prisoners of your past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Go ahead, dial on in, 877-927-6648. If you can't dial in, let your fingers do the walking. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 250 points, 24,749 is the print. S&P's off 14. She's trading at 2750. NASDAQ 100 is almost flat. It's only down 3-point-to-roonies out there. Something to think about. Russell 2000 off 5 points. Semis are down 8 points. That's about 0.6% to the downside. So everything trading to the downside. Spot volatility index, that's going to be an important print at the end of the day. Right now, it's trading out at 1709. I believe that is awfully close to the 50-day exponential moving average line. We'll figure that out during today's trading session. Gold is off $2. Silver's down 9 pennies. Light sweet crude is up 4 cents. Leading the charts to the upside is Lending Tree up $16. Google's up 12. Amazon is up 10. Equinix is up 10. So we've got some things moving to the upside. To the downside, off $17 is China, lodging, something or other. That's nearly 12%. Boeing is off $10. That's putting a big stinger. That's down 3% into the Dow. Not the only stock trading to the downside. Many or most of the stocks inside the Dow are trading to the downside. Tesla is off $8.50. That's 2.5%. Signet Jewelers down $9, nearly 19%. Chipotle back on the screen, down $6.70. Of course, I want to look at what you want to look at. I would assume one of the things that you want to look at is, hey, Steve-O, what's going on inside the market right now? Let's always just step back and try to keep things in perspective. I think keeping things in perspective is very helpful out here. The first perspective that I always like to look at, that I know that you always like to look at as well, is what does the Dow typically do on an annual basis? You know, what is its seasonal pattern? So let's remind ourselves that typically the Dow forms a bottom the end of January. This year it happened to be February 8th, February 9th. Okay, really right on schedule. Markets then, off of that low, move higher into the middle of February, pull back into March 2nd. Now, sometimes these dates are exact. It never surprises me, but it always surprises me when it's like to the date. This is used as they would in Pirates of the Caribbean. You're a pirate, I'm a pirate. We're all pirates out there. So we're using this as guidelines. It doesn't have to happen right to the day. I want you to understand the typical pattern. It's like driving down the expressway. You anticipate there's going to be traffic in a certain area. Sometimes it moves a little south, a little north, a little east, a little west out here. But March 2nd, I believe inside the Dow, that is a most recent bottom that you and I are actually taking a look at. So that typically forms a bottom, moves higher, moves back down into March 15th. where you see a little bit of going sideways and just kind of like the market is doing as we speak right now. So with regard to asking the question, what's the market doing and what does it typically do this time of the year? It's doing it, right? It is doing it as if on cue out here. So today, tomorrow, may be an important time to be looking for a low. That's what this chart suggests that you do. All right. Well, if that's its suggestion, and if that's the case, well, then what do we have to see? If we take a look at the Dow specifically, whoops, I didn't mean to do that, but I meant to do this. There we go, to explode the chart. So there's a descending trend line. Very clear that the Dow would need to take that out in order to say, hey, I'm going higher, maybe back to its all-time highs. Until it does that, we can see an established downtrend out here. I think I already have these lines drawn in. Let me just go back here. Here is the rising trend line, right? Now, this is the touch point. We're just looking at trend line versus channel line. We can draw them both out here. So we're looking at the low of February 9th. We're looking at the low of March 2nd, out there. Seemed like that was on pace. I didn't type that date in by, just before the show. It's in the newsletter. It's been in there for what seems like forever, pretty close to forever. And that's the next touch point. We can see prices pulled right back into that, anticipating a normal bottom around March the 15th. 15th, 14th. Let's not parse a day or two out here. Let's just realize that so far the trend is still your friend. So just like to the upside, you got resistance. To the downside, you have support. What's another key number to be paying attention to inside of the Dow? Well, I would argue to say it happens to be a number that's being tested as we speak right now. That number is 24,719.22. You might say, well, what in the Sam heck is that, Steve-O? And he would say that is the close of 2017. So that is the close on December 29th, 24,719. It's really important for the Dow to close above that. If the Dow were to close below that level, that says to me that price then is going to go test that so-called lower swing point. Is that March 2nd? Is it the high of March 2nd, 24,592? Is it take us all the way back into the February 9th level? I don't know. One of those two would be the targets. You see, when price got back above the 24,719 level back on February the 14th, that's what set up the run. We didn't know that it was going to end necessarily. Might even be a Fibonacci retracement. I don't know. But what we do know is that that set up the descending trend line out here. And once price closed below it, that was a trading day of March the 1st, price then went down to test that February 9th area. All it did was it tested the top, rejected it. What did it do? Moved right up and tested the trend line. What has it done now? It's come right back to two levels, basically, of support. I don't know if this support level is going to hold. If you are somebody who took a short and you are a very short-term trader out there, then protect your assets. Make sure that you move that stop in that trade, because you can't look at this chart and look me square in the eyes, if you were looking at me square in the eyes, or even oval in the eyes, to tell me that price is going to go ahead and bust through this area. You just can't do that. I mean, you can, but I wouldn't do that. We'll be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, I was going to continue on with that train of thought here. I was trying to do something, and my Ninja Trader platform seems to have frozen up. It doesn't seem to. It has frozen up, and that makes it a little bit more, makes it impossible for me to go on to the next thing out there. If I reboot it during the next break, it takes a while for this thing to upload. So I probably should just do that anyways, and then just say the heck with it. So let me, and then I'm going to go on to a question that has come in from I'm not rebooting the whole system, just trying to close this one thing down if I can find it here. What's the are you kidding me? It's not in here? Oh, there it is. Okay. Let me end that task. Okay, good. Okay. So I'll go ahead and try to get that started. But there was a question that came in here. There's still plenty for us to look at. But it's really a bummer when you have a plan, especially when the plan comes together, and we'll see if we get that plan to come back together for us. But in the meantime, Sandy S. writes in and says, "Hi, Steve." I say, "Hi, Sandy." It's "Hi, Sandy S." Could I get your opinion on LYG? So let's go take a look at LYG. First, let's go figure out what it is. It's Lloyd's Banking Group. Again, ticker symbol LYG. And the first place for you and I to start, Sandy, is with, in fact, it's the only place that we're going to start and probably finish, is going to be taking a look at its daily, its weekly, and its monthly set of profiles. So here's what we know about the daily set of profiles. This thing is just trading in between a range, between the bottom of its box, 377, and the top of its box, 385. We know it's a bullish structured box. We know that because the center line at 379, yeah, right about 379, is closer to the bottom at 377 versus 385. What this says to both you and I, and this is also coming from a previous daily bullish structured box that was nearly at the same profile level at the bottom. So this 377 area should be strong support. Now, I don't know if you're in it, you're looking to get in it. If you're in it, what you would prefer not to see is a close below the swing point from February 9th, an important swing point with more than 7.7 million shares out there, the bottom of which is 368. That would then suggest to you could have an A to B equals CD to the downside. On the daily chart, that would give you a price projection. I'm not saying this is going to happen. I'm saying this is what would happen if you close below 377 and if you're coming into that swing point with volume, again, 7.7 million shares. That would take you back to about the 348 level, the 1-to-1 A to B equals CD. Again, not saying that's going to happen. But interestingly enough, that's would be 348, maybe down to 334. And what we have inside the weekly set of profiles is prices trading above the top of its box. That's a beauty. That's at 378. As long as price can stay above 378, well, then all you're dealing with is this 385 level of resistance. You get above that, you're back up to the most recent high. The most recent high being the February 21st level. You prefer, and that's at 401. You prefer to see if price can move up to that area, you'd like to see it move up with more than 15 million shares out there. If we look at the monthly chart out here, all you see, well, you see a nightmare of a chart when you really pull it back into the 2007 time frame, and that's way out at the $48. But let's just get rid of that for right now, because that is the wall of worry. But what we do see out here since October of 2016 is a steady rise, a steady set of higher lows and even higher highs inside of this equity. What it's containing, the price on this, is this big, huge downdraft, basically, which was from the month of June 2016. And so there's a number, what appears to be a number of investors there that had bought between 434 and 273, and they're just not sure what this equity wants to do. You'd like to see it bust above that 434 level. If that were to occur on the longer term, you're looking at about the 566 area. So what is this doing? Hey, basically a consolidation going on here. I don't know the reason that you're specifically looking at Lloyd's banking group out there. Maybe there's better looking stock charts, especially when you go back and take a look at how nasty of a fall this was, which is up in 2007 in the 47.40 area. Now, I don't know. Maybe there were reverse splits going on inside this equity. I don't know the history of Lloyd's banking group, but if this was really going on out here, this is going to be tough sludging all the way to the upside out there. So Sandy S., thanks for writing in. I hope that helps you out a bunch. Let me see if we've got any other requests out here. And we do not. So the phone lines or the let your fingers do the walking lines, they're open. So what are we going to do next? Well, I think one of the things that we should do is just kind of get a sense and a feel of where are we on the market breadth issue today. Well, if we look at the New York Stock Exchange, it still is in the hands of the bulls. Yeah, even with this decline the last couple of days out there. Why does Steve say that? If we look at the advanced decline oscillator reading, difference between two exponential moving averages, 19 and 39, that is above zero. It's priced at 46.24 as we speak right now. Above zero says it is buyers. Yes, I know things. This is a retracement. Let's not get too excited here about what the market. Look, you know, the one thing that I forgot to say, just want to keep things back in perspective out here with regard to the Dow. You do know that its average daily true range, just for the last 10 trading sessions. That means we're not talking about going back to February 8th or anything. We're just talking the last 10 trading sessions. It's 427 points. These moves we see of 250, 300 or what have you, it is no big, it is less. The price movement we've seen today is less than the average true range over the last 10 days. This is kind of the new normal as we speak at the moment. So just keep things in perspective. That's what Stevie says out here. It makes it a whole lot easier to think. If we take a look at the New York Stock Exchange, it's really just coming back into a breakout area. That was that breakout that took place on March the 9th. So you get bullish hands that are in control. When that changes, then we'll go ahead and change our tune. But we have to sing in the key that the market is presenting to us. If you look at the NASDAQ composite, shoot, this is just testing what could have been or should have been old resistance, 75.05, 77 out there. And that was the high from back on January 26th. What used to be its all-time high, no longer its all-time high. That took place yesterday. Do we have a big old reversal yesterday? We most certainly do. But price really just pulling back to support. Its advanced decline oscillator reading is above zero. If you're a bear, that is not what you want to see. You want to see it get below zero, close below zero. Maybe it does it at 4 o'clock. But at 1:26 in the afternoon, it ain't so. And then, you know, the Dow has come back down to support. Its advanced decline oscillator rating is below zero. If we take a look at that spot volatility index, a number that you're going to be, well, likely be focused on because it may change, is 1699. That's the 50-day. You are trading above it at 1706. Now, that is something that the bears do want to see. So I have a little bit of food here for the bulls, for the bears. Let's just keep things in perspective. It closed below that 50-day line, 1699. Resistance was tested and rejected.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, folks. Hey, that was a nice move on your part to go ahead and close down the Ninja Trader platform and bring it back up, and it did it just as we were coming into back from this break. I like that. Just gives us another set of tools in order to be able to analyze what's going on in a specific marketplace. Like Dave here, Dave from San Jose writes in and says, could you please cover Micron? MU is the ticker symbol. He sold it at $54. Right now it's trading at 59. at a good gain. So, you know, nice job there. Bravo to you. And he's looking to re-enter. Also looking at LRCX, maybe as an alternate choice. I believe that's one of the triple ETFs. But let's just take a look at Micron Technology. See what it did, see what it's communicating to you. And first, if we look at market profiles out here, we're going to see, Dave, that price is above all of them, which means support is way down below. 46.12 on the daily, 43.70 on the weekly, 36.07 on the monthly. So they're basically of no use to you at this stage other than to say it's bullish looking based upon profiles from Micron. If we take a look at what Micron has done thus far, yesterday, the day before, was a completed 1-to-1 A to B equals CD to the upside. When I say completed, all I mean is that it met its first objective. That doesn't mean that that's where things end. And as we take a look at it today, it still means that's not where things end. Yes, yesterday it made a higher high, sold off during the day. It's not a bearish reversal candle. It was pushing higher with volume, 142 million shares. Yesterday, the day before, 138. The day before, 65. So it was pushing higher with volume. It has pulled back a bit today on what? Lighter volume. 58 million shares as we speak right now. Its next price target for you is 66.83. Where's a good buy point? Well, I know you were out at 54. I probably can't easily find 54 as a target, but I could offer to you 55.30 as we speak right now. I don't know that is where price will move to. 55.30 is Stevie's red line. His price oscillator is really on the rise out here. I mean, it looks muy bueno. You can see basically nothing but red boxes out here that have formed. That's a Stevie's momentum indicator. So even on the decline today, it has not formed one of those green boxes, which would not mean that, okay, it's getting ready to bite the dust. It just gives you a nice spot to then say, okay, momentum-wise, once you clear the top of that, it would be off to the races. So the best information that I can provide to you right now, and it's only in the third leg on the way up, only letter C out here. You know, you were in this, you say a nice profit. So I don't know how much of that profit you're willing to give back inside of Micron out there to get back in. So you've got to be the judge of that. If you just simply are looking for a pullback, the best number that I can give to you right now would be about 55.30. Again, that number is going to change, you know, it's, as price continues to change out there, and that is Stevie's red line. So thanks for writing in. I hope that that helps you out. Oh, you did say L. Let me see if I might. Oh, yeah, there we go. LRCX. This is just for the heck of it. Let's put LRCX up on the screen. Lamb Research. Okay, so it's not an ETF. So let's take a look at this. Will be good because let's take a look at Lamb Research for you. LRCX out here. See what it is doing. Again, profile-wise, well, profile-wise, at least this one on the weekly and the daily, the weekly and the monthly, they're attainable, meaning a pullback to 206.15 or 203.61 would be levels that you would be looking at. Now, a slightly different pattern out here in that it has, looks like this is really completed yesterday. Let me see if I can draw this in. I don't need to see if I can. I know I can. But it looks to me like this was maybe a butterfly cell pattern out here yesterday. And it really was. So there's your butterfly pattern. The old butterfly, thanks to Larry Pesavento. He is the butterfly catcher, right? He is the godfather of butterflies out there. And I'm not talking about the kind of butterflies you get in your stomach every now and then. I'm referring to those where you see an A to B equals CD. That's an expansion of a swing point. In this case here, probably was the all-time high, was this little bear sash candle back at the 218.48 level on January 25th. So in this case here, this completed an actual sell pattern where Micron did not. We say that because this is an extended stock. Yesterday's candle was a bearish reversal signal. It was also a key reversal session out there because the high of the prior day was exceeded. The low of the prior day was exceeded. It was in an extended condition. We can say that because the 1.272 expansion of a set of swing points out there, and we closed in the opposite direction of the trend. Whew, that is a mouthful. But you know what I mean. That's what a real key reversal candle session is. So what does this mean? This means you should see a retracement. Well, back to where? Well, the first place you're going to look is 212.91, Stevie's red line. Is that all? In this case here, you'll really want to do retracements, 0.382, 0.618, 0.786. That's the first level to be paying attention to. In a real strong market, the answer is yeah. That's as far as it will retrace. Or we will look at the retracement levels out here. The retracement levels will get you, well, I didn't exactly do that, 100% accurate. In fact, it was not accurate at all. At least let me try to do this here magnetically. Get to the right swing points. 205.06 is the 0.382, and 212.90 was Stevie's red line. That's what I would be targeting, but I would also be watching from a volume standpoint, and that is on Lamb Research, ticker symbol LRCX. That was all for Dave in San Jose. You don't want me to sing that song. Not while I still have a slightly scratchy throat. Of course, you might not want me to sing it anyways out here. What the heck just happened there? What? How did I lose the mailbox? Now, this could be a problem. This could be a real problem. I did something. That's really weird. Well, so for those of you that are sending in emails, there could be a slight problem here as I don't think I can access them. I'll have to go figure that out during the next break. Always something to do during the breaks out here. All right, nobody asked me about gold just yet, but I'm sure somebody out there is thinking about asking me about gold. So let's go take a look at gold, see what it's doing. The answer is not much. It's off $1.90. It's uncertain as to what it wants to do out here. It's trying to do the old head fake Rooney, and that head fake Rooney is just trying to subtly get above Stevie's red line, but it has been unable to do that out there. 13.2720 is the number as we speak right now. If it just simply closes above Stevie's red line, it'll turn that price oscillator, that's the bottom panel of my screen, up right above zero. And that would say to you and I, something to think about. And that think about says price would be going higher. And it would be going higher to where? Well, at least the descending trend line. Channel line is what we have drawn up on the screen out here. And that's priced right around the 1345 level. And if it can't close above Stevie's red line, well, I don't know. It could head down into the 1300 level. Right now, gold, not doing a whole lot for you or me or the other guy. Whoever that other guy is, or gal. Steve Rhodes with TFNN. Dow's off 213, S&P down 11, the NASDAQ up 9. Interesting.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So as I say, the Dow's off 200 points. But look at the 60-minute time frame chart out here for the ES Mini. We'll go back and take a look at it for the NQ. But you can see that, hey, formed a nice little price relative strength divergent pattern up here at the top. This was yesterday. Also happened to be wave number 7, letter G on my screen out here. But we can see it's making, at this stage, and this is a candle session that closes in about 18 minutes, 40. Yeah, 18 minutes out here. Now, right now, it's a hammer candle. Price moving lower, doing less relative energy. That would just mean that the ES Mini would bounce up to 27.67, give or take out here. I don't know if it's going to end this session, the 60-minute session, as a hammer candle. But if it does, what I want you to anticipate is at least a bounce up to 27.67 out there. And that, if it closes above that, then price moves higher. So that's on the ES. Again, I don't know if it's going to be a bullish reversal candle or not come 2 p.m. And even when we get off the air, I won't know that for you. With regard to the ES, as far as the NQ, just curious, what is it doing out here? So this has already given you the bottoming signal. So if we take a look at the top, see if I can just expand this out for you. You can see it made nice little high out here. This was yesterday. Price moving higher, doing less relative energy. You get that bearish reversal signal. You get below Stevie's red line. It does everything for you. And then price moves lower overnight. On the shorter-term chart for the NQ, it gave you the same bottoming pattern. That was at about 11:30, I think, if I'm not mistaken, last evening. Makes a bounce up to a certain level. And then this morning starts to trade lower. Now it's trading lower, was trading lower, doing less relative energy. And then at 1 p.m., as we were coming online, you had the bull show up inside the NQ. Nice little piercing candle. Now on this 60-minute, so the 2 p.m., price is trading above Stevie's red line, 7078. So let's go into the NQ. That means you're having follow-through in it, assuming it closes above that level. Now let's go take a look at the TAS market profile for the NQ and the 60-minute time frame. The reason is because these profiles are going to be better than what I could have given you on the other chart out there, although it turns out they're one and the same this time around. So now what we know about a 60-minute time frame is that it's not out of the woods until price were to clear 71.2150. Now that would be a heck of a move. It gets back to the highs of today out there. But that's based upon the profiles. Right now, resistance is really at 71.01. And I was giving you, where was that NQ chart? Well, I didn't have a level. So it looks like 71.01 is in the cards. You close above that. 71.21 would be back in the cards out here. Where are we at on the daily? Really nothing, no big deal. Today was just testing again old resistance. Potentially, that was the old previous high out there. So that's what the NQ is doing. The NQ is in no mood to put up with this kind of shenanigans out here. You kind of hear what I'm saying out there? It doesn't want to have anything to do with these shenanigans. Now, what does that mean? Does that mean that the Dow is going to bust out the highs, right, when we took a look at this? No, not necessarily. It at least would trade up to the descending trend line. You know, that's what it would do, or should do out there. What else do we have market breadth-wise? You know, market breadth-wise in the NASDAQ on a 60-minute basis, it's still bearish as we speak right now. So you have 24 issues trading above the top and 45 below. So it's not as enthused as the other charts were. That does not mean that it won't trade higher, okay? That's definitely not the meaning here. But if this were bullish, then you would come up with a different opinion. So Bear says you've got some does it sound like a market that is conflicted? Yeah, it's not me that's conflicted. All I can do is just simply read for you the signals. What do you do? What should you do? Hey, we said that in the beginning. For those of you that were short the Dow, with price coming down there, the sphincter muscle could get a little tighter out there. And depending on when or if you went short the market, you know, you want to make sure what to properly anticipate out here. On the shorter term time frame chart for the ES Mini, I don't think I have any pattern. Yes, I don't have the well, I don't know. Was this another A to B equals CD? I don't think it completed that pattern. You can see the overnight pattern where that hammer candle fell or completed. Yeah, so we didn't really get that target down there of 27.38. Doesn't mean we won't. Just means that I don't have a completed pattern on a 30-minute time frame chart. I wish I did. That would be my preference, and I would give you some more definitive action, because what I could then do with the ES is I could bring over this chart, which I don't show too often, but I could bring over this chart, and we could see that on a 30-minute basis, this thing went to a snap back to positive back at 1:35 p.m. exactly, and it's 1:47. So 12 minutes ago, you had the, that might have been even a minute or two before that. Let me give you the right time. That was at 1:30 even Steven, was when the ES Mini, or I should say the S&P 500, for its 30-minute time frame, went back to positive, and in a nice way out there. 300 on a 30-minute chart, if we had them up, you'd see 302 issues trading above the top, and only 48 of them below the bottom of their 30-minute profile. So short-term wise, this is saying expect more bounce. Do not be surprised to see more bounce in that step for the markets. Now, that puts us back on the Paw Patrol, and Paw Patrol says, hey, what is the VIX trading at right now? 1665. So 1697 happens to be the 50-day right now. So, you know, you've got a test and rejection of a level of resistance. You know what this means? It means you're going to see a bounce, and you may have seen the bottom, at least for the day, and now a bounce up inside the Dow, back up to that upper descending trend channel. That's how we've got to read it as we're speaking at 149. And if you're short some of those other indices out there, I'll just say be very, very careful, because nothing has broken down. There's nothing that is broken down. I won't say, I'll say it, that nothing has broken down. Okay, let's go take a look at the IYR for Peak D in the den. So as we go take a look at it, IYR, that is what, the real estate? Yeah, so the real estate. Are you in this, Peak? Looking to get in this? Tell me what you're doing. Makes it a little bit easier for me to assist you with that. But as I await that information, we can see that on a daily basis, price is trading above the top of its box, so short-term bullish. On the weekly chart, below the bottom of its box, so that's short-term bearish. And the monthly chart, above the bottom of its box. So you kind of got 2 out of 3 out here. So what does this mean? We take a look at the IYR out here. Well, let's go try to figure out what it means. I'm just doing some work on my other screen, getting ready to move it over to you, just to see what we could see, looking to add. You're in it to win it. So as you take a look at the IYR, when it made the bottom out here back on the trading day of February 10th, no revealing pattern to your eye out there. So we didn't have that peak. And we can see that yesterday was the first time in the Rhodes Momentum indicator tool that you got at least a red box out there. Support right now, 74.19. We come back to this break. I'll try to give you where that next resistance level is. Looks like about 78 and change up. Right.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So, hey, Pete, to answer your question, you said, would I be a buyer here of the IYR? Here's the pattern that I like. We see this nice high that it had out here December the 19th back in 2017. Makes this low February 9th, makes then moves up and makes a higher low back here in the trading session of March 2nd. So we like that pattern. If you're looking to add, which I think you were, I'd be targeting 74.20 at the moment out there. So best of luck with that trade. Let's go to Ron in Denver. Ron, thanks for calling. Thanks for holding. Tell me what you want to look at.
Sorry to call you so late, but
it's okay.
I went along the DIA when it was about 247.5. Market was down 250. I just bought calls that expire a week from Friday. Any thoughts on DIA Diamond?
Yeah, I think that what you can take a look at here, here's what we know about the Dow Diamonds at this stage, is that this thing should run into resistance for you. I'll give you a price. Today, that resistance would probably be about 253. 60, give or take.
Okay.
Tomorrow, it's a 253 and a quarter or something along those lines. You needed to bust through that trend line in order to really capitalize off of that trade out there.
Yeah, if I see 253, I'll sell. I'd be happy with that.
Okay.
Thank you.
So
Thank you, sir.
That has a possibility. All right, you bet. Thanks for calling.
Thank you.
No problem. That was Ron. And folks, the reason is because, hey, if this was a bottom, and that is how Ron has traded this, then the support line should hold. We're seeing how the NQ is giving you, and the ES even is giving you some nice signals out here. Even inside the ES, we're not going to get a hammer. What we're getting on the 60-minute chart is a three-river morning star pattern, or so it looks. 4 minutes left in the trading session. I don't know for sure. You can see price hitting Stevie's red line, 27.67. That's kind of like the easy no-brainer call. Now the question is, can it close above that line? And if I had more time, I'd sit here and we'd walk through those charts. We're just going to have to do it tomorrow. But I've got something even better for you. Your favorite polar bear, my favorite polar bear, Coca-Cola's favorite polar bear, David White. He's up next. After that, Tom O'Brien, 3 to 5. I'll be back with you on Terrific Thursday. Have a great day. Thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.